All right, good evening, everyone. This is DayTraderRockStar here for DayTradingRadio.com, and I want to do a little educational video here. A very interesting chart today on the S&P 500. Started off nice. We had that big rally yesterday on the 8th of July, and then today we had ourselves a nice little push up. It looked like we were going to break out, and then the whole market gave out, ending down about 260 something points. And this market looks like it's ready to tip to new lows and head lower. So we're going to be able to, I want to show you how to profit on that right now. But this is an excellent, today's chart, as you can see, it's just full of information. So I just want to go over it with you, and maybe you could gain a little insight on how these markets work. This morning, we opened up right at a certain moving average. If I look at the 60-minute moving average here, I don't know if I could actually... you could see it in the morning, but we opened up right here, right at the 50-period moving average on the 60-minute chart, which is a very, very strong moving average. You can see it right here. We moved right it, opened up right at it. The stochastics on the 60-minute were overbought, and that was a clear sign of a market pullback coming, because throughout the for as long as I could see, this market's been having trouble with this 50-period moving average, as you can see here. So hard to believe that was not going to have trouble one more time, and it sure didn't. So that was the first thing. But now let's analyze this chart a little. If we go to the 5-minute chart, and we see, we pulled back. It was a perfect pullback. I said, well, actually, I was looking at this, and if you listen to the radio during the day, I'm on it every day. I go over the markets live on the air, so definitely stop by and, announce all the indicators, all the support and resistance level. And you can see very clearly on the 5-minute chart we had some good support here on the 20-period moving average, and that's where we bounced right back up towards the highs. And at that point, let's get this out of here. At that point, we were making a double, we bounced back down, right back to the 20-period moving average. And at this point, it looked like we were forming a ascending triangle here. So we had a nice little trend line under here. We had a top right here, and it looked like it was just getting ready to pop up here. And then what happens was, I kind of figured this might happen, is that we might try to just break down to the downside here. And what happens is we popped up a little, we got a little oversold. No one fell for it. So instead of having this trend line going across and making an ascending triangle, what happens with this trend line, just a tiny bit up, just moving it off of this horizontal line, pushes it up, and actually starts making a rise in wedge pattern, which turns a bullish pattern into a bearish pattern. Just as simple as that, And you could be micromanaging these formations sometimes, but it's just interesting to see how a very bullish continuation pattern could easily turn into a very bearish pattern just by and that's what happens. If it fails, it fails, and that's if it doesn't go up, it's going to come down. So we broke down through here, and this is where again, I was setting out these alerts all day on the site. So right here we came right down to the 200-period moving average, and it was an excellent area to get a bounce, because that's one of my favorite moving averages to trade off of. The 200-period moving average on the 5-minute chart is the best moving average to trade off of. So we had a nice bounce off of that right up to the 20-period moving average. Again, the market's showing its bearishness coming out, because that's normally what we've been doing, is trading underneath these moving averages and using these as resistance. So we had that one shot this morning. We broke down. Now we're going to just use this and we got weaker and weaker into the day. See, we bounced up and we just gave out, and almost actually starting to see a little capitulation here, and that's what I'm looking for in the next couple days. I discussed this on the radio a lot. This market is getting to a point where we have two choices. All right, we're going to either get some type of news that's going to hold this market up, and that news probably is going to end up being bad news, because people are looking for the last shoe to drop. This is what they're looking for. No one's going to believe that the last shoe is dropped until basically the last shoe drops, or there's capitulation selling. Capitulation selling is where there's just the people who are holding stocks. If you're holding like these banking stocks and you're like, oh, it can't go lower than, just to give an example, you look at Citigroup here, and you're like, well, Citigroup, this is what capitulation is about. Citigroup was trading, well, up at $50, all right, last year. Now we're trading down at $16, all right. Eventually, people are going to have enough pain. They're going to say, you know what, I don't have to deal with this stuff anymore. I just don't want to deal. I'm taking too much pain. I don't know how far it's going to go. And this is what happens. That one more push down, we're so close to it, that people can't believe that these stocks are getting this cheap, and one more push down, and people are just going to say, forget about it. If it could go this low, it's going to go lower. I'm just getting the hell out. And that's when you're going to see everyone's just start throwing stocks away, and the volume's going to pick up, and you're going to have another 300, 400 point down a couple days, and volume's going to come up, and the main indicator you're going to be watching here is the VIX. So that's the next thing I want to concentrate on here. Over the last couple of weeks, I've taken a pretty decent position in the VIX. You could go, this is one of the ways you could actually hedge your long positions, other than having the pro shares who are, trade the index, short the index, like the DXD, the QID, the SDS. You could also, go along the VIX, is the volatility index. And when you do that, you're basically, looking for fear in the market to go up. You could actually buy options on this or futures. And historically, when the market makes a bottom, we get a spike up above, around that $35 area. So, I'm not going to say we're going to get a spike right up to that $35 area, but I do think we're going to spike up around that $32 area. So this is looking good. I do believe we're going to need to see that spike in the VIX for people to feel safe enough to get back into the markets. I think this is going to be your main indicator. I'll let you know when all clear, the all clear whistle is blown. Watch the VIX spike probably the next couple days. It's really set up here. We're really set up for a big sell-off. We just need a little news or something just to spark this market. So the important thing is to keep your powder dry. There's some really good oversold stocks out there. I'm not going to discuss them right now because limited time and it's late. But tomorrow's going to be fun. You don't want to be stepping in front of a major sell-off. So keep it nimble. Keep the shares light. There are some cheap stuff showing up. I actually picked up some Starbucks today, right at $15. I think if you get it into the $14 area, you're getting a really good deal on Starbucks. Goldman Sachs starting to get down cheap. We're going to watch. There's a lot of cheap stocks coming around, and again, I list them every day on the site. So come on by DayTradingRadio.com. That's DayTrading Radio live internet stock radio, live market trading and analysis and everything, all free. You can do it at work. You can do it at home. Just come on by and check it out. DayTraderRockStar, good luck tomorrow. It might end up to be a doozy, so again, keep your powder dry.